All right, everyone. I was like looking at my screen. I was like, where am I at? I'm lost mentally. Really, I am. Welcome, everybody. This is Travis and Peter back for our weekly recap. Success Academy trainers sharing our thoughts on the market, covering some trades, covering some charts, telling us the stupid mistakes we're making, even some of our successes. I'm going to cover the market here, talk about share an example I share with Success Academy members. Our last live call was a simple path to becoming a millionaire. I accidentally discovered from one of my millionaire mentors. Kind of give a big picture overview of my trades, where I'm at right now, what's going on in my head. People seem to like that, like me sharing like what's going on in my head as I'm placing his trades. And then Peter's going to cover a member's stock, just kind of give a stock analysis of a stock a member wanted us to look at. So we'll do that, and he'll also share some of his trades. So I'll let Peter go first, and then I'll round this out later. My brain's not entirely here today. So let's give the control to Peter. He's more in control.
He gives me a lot of credit, but it's not always the case. As a matter of fact, we were just talking about how so I'll share something with you. I wasn't going to share it. I didn't even think about sharing this, but I think it's a good nugget. So if you have a mentor like I do, I have Travis as a mentor, and he gives you some advice, or maybe gives you a little bit of a tip. It's always a good idea to get rid of the procrastination bug and act on that tip. So had I done that,
we won't go there.
Had I done that, I would have had more profitable trades, but I didn't act on it. So all right. So I'm going to just jump right into it. One of the things we talk about, you guys hear us talking about it, is Market Club. We use Market Club as a tool to help us with getting in and out of trades, and actually helping us pick stocks to look at to place trades on. And what we use is kind of a scan feature of Market Club. You can see my
Yep, I sure can.
So I'm going to just go to it real quick. If you were a member of Market Club and you became a member of the options portion of Market Club, you can actually click here. Market Club set this up specifically for Travis based on his template. And basically this is what we do as members of Market Club that are in the Success Academy. They know how to do this. This scans stocks for us, and we look for things. So the market was in a general up position. It's a little bit down now because it's gotten a little bit of a pullback, but the market is in a confirmed uptrend. We know that. We're in a bull market, so we look at these plus 100, plus 90s. I don't usually go below 90s, but you can go to 85 if you want. I usually don't. I stick to the plus 100s, and then we just look at different stocks. What I wanted to cover real quick, for those of you guys that do this, or those that looked at Market Club and you're thinking about doing it, Market Club is extremely useful, and it's very, very good as far as the trade triangles, but it's not 100%, and it's not the law. Okay, so in our Market Club template, there's still work we need to do. We talk about this all the time, Travis and I, but in different things, but this is one of the things. So I'm going to look at two stocks here. So Twitter, which recently triggered, and Apple, which triggered. Okay, and the first thing that we do when we see these is we take off all the noise. You'll notice this is what we call a naked chart analysis. This is a 1-year chart. So if you're looking at this chart, what's the overall direction of this stock in the last year? Sideways. I mean, it went up here and then it dropped back down, and it's since November or October, I guess you could say, it's pretty much gone nowhere, right? Then we look at a 2-year. We don't end there. We don't just say, oh, 1 year looks horrible, let's not do it. No, then we look at a 2-year. So a 2-year looks a little bit better, right? So from back in March around this time, you know, Twitter has technically gone up because it was down around the 15 to 20 mark back then. So it has gone up, but it's not an overly aggressive chart, right? It's slightly gone up, but you can still see over the last real year, it's just been kind of flat. And then we look at a 5-year chart. And from a 5-year perspective, what has Twitter done? Nothing. 5 years ago. It hasn't even gotten back to where it was 5 years ago, right? So from that perspective, if I were placing a trade on Twitter, or if Twitter triggered my Market Club template, I'm done. I don't go any farther. That's me. However, we do have a member that did place a trade on this, and he explained why he did it. And when we look at the 1 or 6 month chart and then throw on our trade triangles here, okay, you could make an argument that it's more likely to go up than go down. You could make that argument because it is higher than it was a year ago, technically. But I want to put that together with, sorry if you could hear that. I want to put that together with a chart like Apple. Now, this is a 1 year chart, naked chart analysis. So even Apple, from this perspective, what has it done since this time last year? It's gone up a little bit, right? Not a ton. It went up big and then it pulled back big time in 2018, and now it's kind of charging back up. But it's a little bit more promising chart, right, from a 1 year perspective. So now let's go to a 2 year. Now, 2 year looks a little bit better, right? But again, it's not overly aggressive, except in, starting in June, it started to get pretty aggressive going up, and then it fell back. And now it's starting to be another kind of aggressive year, it looks like. And then if we look at the 5 year chart, well, this I like a little bit better because Apple is way up than where it was 5 years ago. So this looks better to me, right? So now when I put on my trade triangles, now I got a little bit better sense. I can go back to my 1 year or even 6 month chart, and I could say, well, I have a much better sense that Apple is going to continue up than down, even though today's a down day, right? We all know that stocks don't always just go up and just go down. They have rest days in between. So from the perspective of Market Club, always do your naked chart analysis. And then if you start throwing on your lines, I got my daily moving averages that I can throw on to help me if I want. We can look at it from a 6 month perspective. If we used without the Market Club triangles, if I use just my moving averages, I might wait a little bit because my short-term moving averages are below my long-term. So that may be a way to look at it as well. So just something to keep in mind, okay? That cover it pretty good, Travis?
Yeah, but I'm going to ask you a question like you asked me the other week. Why do we do a naked chart analysis, and why? Can you explain it? And then also, why do we look at 6 month, 1 month? Why do we even bother? If we're only going to be in trades a couple of weeks, why do we go out so far? Well, why do we look at 6 month, 1 year, 2 year, 5 year? Why do we do that?
Well, because that gives me the story that the stock is telling me. So if I look at, everything's a snapshot in time, right? So if I just looked at a 1 week chart, that's great. I can tell you what it's going to do in a week. Of course, that doesn't help me if I get in a trade that's going to be 60 days long. So then I look at things a little bit longer. Why do I look at a 1 year, a 2 year, a 5 year? The really short answer, you guys, is because that's what Travis taught me to do. And that is what I do. The whole mechanics of why I do it, to be honest with you, doesn't matter. It's what Travis has done and he's successful with it. So that's why I do it. But in the way I look at it, the reason why I go to 1 year, a 2 year, a 5 years, because this gives me the overall story the stock has been telling me. When I look at the Apple's 1 year or 5 year chart, what's the overall story? Apple's going up. Yeah, it has pullbacks. Every stock has pullbacks, but overall, in 5 years, Apple has gone up very strong, right? That's a strong stock. There's no doubt about it. Strong company. When I look at Twitter, over 5 years, what has it done? It's gone down, right? So I now have a better sense of the direction I would want to trade this, if I want to trade it. Now, for me personally, I wouldn't trade this stock because this one actually, it's gone down, but technically Twitter hasn't told me exactly what it wants to do. I mean, you can look at the 5 year chart and I don't really know what Twitter wants to do. And that's probably has to do, we talked about this in our live call the other day of, certain stocks in certain sectors do weird things. Twitter being one of them. It's a social type sector. And, unfortunately, it probably trades more based on sentiment than it does on mechanics or fundamentals. And that could be why this chart looks this way. When I look at a 2-year chart, though, the overall story does say, hey, it does tend to want to go up, but it doesn't want to do it in a strong fashion. So for me, the looking at the charts that long can also help me decide the type of trade I'm going to do as far as the time frame I'm going to do as well. Apple, I can usually trade just about any time frame, and it can be a winner and it can also disappoint. I've had that with Apple, but I usually get a better sense of how to trade Apple too based on that. So that's how I look at it. But I'll be honest with you, the number one reason why I do it that way is because that's what you taught me. And what I found was every time I bucked Travis's system, I learned the hard way, AKA Macy's. But go ahead. I know I missed something that you wanted.
No, you got it. I'm just gonna give everybody an analogy of why I started doing this. Pull up a 5-year, go back to Market Club, pull up a 5-year chart of Twitter. I'm gonna give you 2 analogies based on my own personal life experience. Stocks are like relationships. All right. All right. So we're looking at a 5-year chart of Twitter, right? It's gone nowhere. No, matter of fact, put on the trade triangles. Well, yeah, it doesn't matter.
I'll do the monthly and weeklies because we talked about this too.
All right. So right now it has a green monthly and a green weekly. It's giving you a signal that, hey, I'm going to go up in the next few weeks to a month. Now, if you've ever been in a relationship with someone who struggled with addiction, that's me. I used to struggle with alcohol. I used to struggle with alcohol. I think for the most part, I'm doing great. You may meet them at a time like this, right, where they're sober, they're doing great, they have all these goals and dreams, and they look like they're going somewhere in life. But you're looking at a very short window of their life. And so you get in a relationship with them, and then you find out they got all these demons and struggles, and then they start drinking or doing drugs again. And it's like, wow, this is not the guy or girl I met, right? Because you're not looking at the last 5-10 years of their life. If you look at the last 5-10 years or 5 years of their life, like this chart of Twitter, you will see they've had a lot of highs and lows, but they've pretty much gone nowhere in life. They're still struggling with the same addiction they struggled with 5 years ago. But because you only looked at a short window, you didn't get the best picture. So you made a decision on a very short window of time, where you should have looked at their whole life, last 5 years, to see if they've actually progressed. Now, let's look at Apple, Peter, 5-year chart of Apple. Let's compare that to Apple, right? If you looked at the same drug addict, right, or alcohol person, if you looked at the last 5 years, you would say, yeah, they've had some struggles, but they're a lot better. They're a lot further along in life than they were 5 years ago. So you got the same signals on Apple, monthly and weekly, but you can have a more reasonable expectation that it's going to be a valid signal because the 5 years of their life shows that they've made steady progress with this addiction. They're not fully healed, and what's the word I'm looking for? Overcame it, I guess, or what's the word? I don't know, I can't think of the word. Victory. There you go. They don't have complete victory over this addiction, but they're making progress and they're getting better. So that's kind of how we're looking at it. So we look at Apple and we're like, oh, Apple's going up the last 5 years. So now when we get this signal, we can have a reasonable expectation that Apple will go up compared to Twitter. So that's kind of the analogy and how I think of it. And that's why we're looking at the big picture. We're trying to see if we can really pay attention to these signals, because the signals aren't the law. It's no guarantee that Apple will go up because there's a trade triangle, but we use them as visual aids. But the main thing that helps us determine if this is going to be a good trade or not is looking at the story, the overall story the stock is telling us, both in a short term as well as a long term. We're looking for some sense of consistency. Does that even make remote sense?
Yeah, no, absolutely. And we kind of covered this offline before we started recording. It was something that Travis stated that is a really good point, especially when you look at Twitter. And so we talk about trade triangles, right? And I started this off with why we want to do this naked chart analysis. But even when we looked at the naked chart analysis, you could see that Twitter, this is a 2-year chart. Twitter was really going nowhere, right? This is a 2-year chart. It was really going, it's gone up a little bit, but for the most part, it's just not going anywhere. But look at the trade triangles. Even the stock doesn't listen to the trade triangles. Travis said this, and it's something good to keep in mind. So if the stock isn't listening to the trade triangles,
why should we if the stock's not listening to them?
Right, exactly. So now when I get into a 1 year, yes, it's got a green weekly, but it had one here and it triggered a red. It had one here and it triggered a red. It had one here and it triggered a red. So there's been a lot of inconsistency. Now you can argue the point that it didn't have a green monthly back then, but it did here, right? And then it triggered a red. Then it had a green weekly, and then it triggered a red right away. So you can use this to your advantage to either say, I'm not going to trade Twitter, or okay, well, what is this time frame? So maybe that's the time frame I get into it. Now, for newer traders that are learning vertical credit spreads, we don't ever suggest you do short-term credit spreads because they're very difficult to manage. But if you've been doing them a lot and you're using Market Club, or you're trying to use this as the same template and you're wondering why you're not having success, this could be why. I don't know. This could be the answer though to your problem, that well, maybe I was doing a 60-day credit spread or a 45-day credit spread. It never seemed to work out because just as I'm getting 3/4 of the way into my spread, I get a red weekly and the thing goes in the money. That can happen. So
one last thing I'll say about this before we move on. You said you wouldn't trade it. I probably wouldn't either. If I did trade this stock though, with selling time, what they call selling strategies, I would have traded out of the money. Because looking at the story, it's told us 5 years now to now, it's gone nowhere. So we want to trade outside that range. And it looks like 30 to 30. So two things. You could do an iron condor. That's where you sell a bullish and bearish spread. I don't teach that, but that's one way you could do. They're out of the money credit spreads. Or because of Market Club, you could say, well, it has a green, it's most likely go up than now. So let's trade bullish. Let's trade some bullish spreads. Those are where you sell puts. But we're going to do out of the money because looking at the pattern has gone nowhere, right? So we're just going to stay outside of that predictability. Again, like the drug addict, like, well, this person may be clean now, but usually about 2 weeks, they start stealing stuff. So they can stay at my house for about 8 days. And after that, you got to go because your pattern is after 2 weeks, you fall off the wagon again and you start stealing my stuff for drugs. So, I'm like always bringing things back to real life. You can tell the kind of life I grew up with, right? So
I love the analogy though. It's a perfect analogy.
So yeah, I grew up in a kind of rugged environment: drugs, gangs, guns, alcohol, you name it. So, but I take all of that pain and experiences and I apply it to investing, and it seems to work out. So,
well, and not to kind of beat this, but yeah, we had talked about the out of the money spreads. You can, you're not going to get the same kind of returns that you get when you trade in at the money, or even if you were like I have an in the money spread right now on SPY. Why? Because SPY is telling us over the long term it's going to go up. It triggered a monthly, so that's why I did that. But in this case, if I were to trade this, it's definitely got to be out of the money. And then I might look at, we've talked about this before. It's called the stock market insurance trader, where he taught us how to trade really long distances. And you can kind of incorporate those there. It's almost like a leap credit spread. And you can incorporate those into it and use it as monthly revenue, because you can shower one of these in every 6 months, because it's going to be that long term. But anyway, all right. I think we've pretty much covered that one. All right. I talked a lot longer than I should have. Sorry. So the last thing I'm just going to cover. So my Macy's trade, we're hoping it's just kind of sitting around $23, $24. I have a covered call at $24. And I'm hoping it gets in there so I can just be done with this. This is one, if you guys have followed us, if you haven't, my Macy's trade was, just not applying the principles taught. I didn't do things correctly, and it's been a very, very costly experience for me. But I think it just kind of sets back to the point we always make, that we don't always make money. Not every trade is a winning trade. As a matter of fact, I was just telling Travis, and I told a member the other day, have more losing trades than winning trades, but because I do a fairly good job of managing them, not always good, not always perfect, but I do a fairly good job of managing my trades. My winners always make up for my losers, and I end up making money. So the only thing that the last one I'm gonna cover is IWM. We were talking about this too. I'm not sure. Maybe I was looking at this big run up and I was expecting it to I think I was getting aggressive here, and that's why I placed a bull put spread here on IWM, and it's now going to be a losing trade. So I'll end up getting out of this probably. I will most likely get out today or first thing tomorrow after amateur hour at 100% loss because this expires on Friday. It's already at 100% loss, so I can't really do any worse, so to speak. But I'm going away I'm flying out to Connecticut on Thursday, so I don't want to be in the trade on Thursday. So today or tomorrow, I'll get out of that trade. That'll be a loss. My IYR is my other one, and this one's kind of flirting with just it's right at the 80% mark. At last I looked, it was at the 80% mark. So I will most likely at the end of the day today, even if it's not at the 80%, I will probably close this trade out because I'm going to be traveling. So I don't want to be in that trade. If the bottom was to drop out, I don't want to be in the trade if that were to happen. I wouldn't be able to manage it while I'm on the road. So, and then my SPYs are way down the road. So that's it. That's all I got.
All right.
I'm going to change presenter view.
Okay. And what I'm going to do is I liked the time we spent actually on Twitter. I think if people really got that, yeah, you may feel like you talk too much, but we both were going back and forth. If people really got that small little tweak in their daily discipline of trying to be a trader. I get emails from people like, I don't know what I'm doing wrong. I'm constantly losing money on options. There's all these little things little tweaks you can add when you have a mentor. So I think we're going to cap that there. I'm only going to talk for a few minutes, but I think we're going to leave that lesson there because I think if people just make that one small tweak, the naked chart test, going out through the different time frames, trying to see the story the stock is telling them, I think they would do better off. I think people get so caught up on the short-term movement. Or matter of fact, your perfect example is IWM. You got caught up on the short-term movement, according to what you just said. And then you kind of missed the bigger picture that, well, it's still technically in a downtrend. And so it's proven to be pretty reliable, the downtrend. So, all right. Second thing is, I'm not sharing my screen yet. I just wrote this down. I wanted to make sure I gave a public shout out to my stepdad. Today would have been his birthday. He died last year, June 15th, which one of the many reasons why last year was completely horrible for me. So my aunt sent me a text this morning and said today would have been his birthday. So I wanted to give a public shout out to him. Very good man, gone way too soon. And with that, on that happy note, let me move on to share my screen. That's what monitor I want to show you. I want to show you monitor 2 here. And let me pull up my chart. And what I'm going to do is I am just going to share a simple path to becoming a millionaire I discovered about 20 years ago. I didn't realize it was a path to become a millionaire. I was trying to become a millionaire through real estate, option trading, and things like that. But my mentor showed me a way to buy cars, a brand new car every 2 to 3 years cash. And then now 20 years, past that, I'm looking at, I'm like, wow, without me knowing it, he actually was showing a simple path that anybody can follow to become a millionaire. I'll give you the link to this special report I wrote, 2010. So 9 years ago, I wrote this. Back when I was sharing personal finance things, everything my mentor shared with me, not just option trading. So I'll give you the report where you can read through it. But pretty much he was walking me through this right here, showing me that if I took my car payment, paid off my car, either sold my car and got a car I paid for cash, take that same car payment and pay yourself, put it in your bank account. He actually told us to invest it, but for this example, I just showed you just put it in your bank account without investing it. And then you save it up for 3 years, save it up for 6 years. You'll see the numbers where you actually can buy a brand new car every 2 to 3 years cash. You don't have to finance a car anymore. And all it takes is just having the proper education or the proper system. Somebody showing you how to do it. This report shows you how to do it. All right, so that was what he taught me, and I was fortunate enough to learn this when I was, I think, early 20s. So if we scroll down, I'm 20 years later, I haven't had a car payment in, well, close to 20 years or more. I showed you how it's worked out, right? And then I'll give you a huge disclaimer here. So $550, old car payment put into a trading account, earning 20% a year. After 20 years, it grows to $1.2 million. Now, that's 1.2 million without having to get a second job, without hitting the lottery, without becoming an expert real estate investor, things like that. Everybody who has a car payment right now can implement this plan and become a millionaire. Whether you're 20, you'll become a millionaire by 40. You're 40, you'll become a millionaire by 60. You're 60, you become a millionaire by 80, right? So you're like, oh, I'm 80. Okay, I'd rather have a million when I'm 80 than be broke when I'm 80. And yeah, you may not be rock climbing and stuff when you're 80, or maybe you can. I don't know. I ran a race, an 8-mile race, and I had 80-year-olds passing me up. So I know there's some very active 80-year-olds, right? And it was, sadly, it was embarrassing. I'm like, oh my gosh, these guys are passing me up, right? So, all right. So even still, like, you can have the best care at 80, best senior community, best doctors at 80 because you have this money, compared to being broke and being on poverty insurance when you're 80. So that's the kind of way you can look at it. I don't play the whole, oh, it's too late for me. No, it's never too late. Now, here's a huge disclaimer. You're like, well, yeah, it's simple path to making millions, and you trade options. You've done real estate, Travis. Yeah, Travis should be a billionaire by now. Honestly, should. I learned these principles over 20 years ago. I should be a billionaire. But Travis has spent this money. I've wasted it. I had, made millions or close to millions in real estate, went bankrupt like most people in real estate, started over, blew out trading accounts. So yes, I've implemented the plan, and yes, we've made the money, and it's just gone in my hands and out my hands. And so I've had a lot of times where I'm starting over, but overall we're still way better off financially. As Peter said, you're financially free. That's what really matters to me. Yes, it would have been nice to be a billionaire, but as long as we're financially free, that's what all that matters to me. All right, so I just wanted to share that. Last thing I'll share, and I'll let you all go, is a breakdown of kind of how I'm doing my trades this year. I was going to drill down and show you because I actually placed a bearish spread. Let me pull up the chart here. So let's pull up the S&P. Matter of fact, I think I have it pulled up on Market Club. So let's pull up Market Club real quick. And sorry, my charts are giving me a hard time. All right, SPY. So 6-month chart of SPY, looking at the Market Club trade triangles. Let's get off the weekly. Well, actually, we can leave on the dailies. Anyway, what I'm pointing to this is this red daily on 322. Per my trade plan this year, I placed a short-term bearish trade in my account. Short-term, meaning that I only plan on staying in this 7 days or less. Here's the mental framework I'm using this year. Last year was really rough for me. Last year, let's say I had $14,000 tied up in bullish trades, meaning that I would only make money if the market went up, right? And then when the market pulled back last year several times, I just sat and took the losses, waited for things to sort out, and my account didn't do as great as I wanted it to do. Well, this year I was like, I'm not sitting there like a victim anymore. I'm going to take action and try to offset what I'm losing if the market pulls back or has those corrections like it did last year. So this year I have 80% of my money in bullish trades. So if the market goes up, I'm going to make my account's going to grow. However, when the market pulls back like it did, I just showed you the red trade triangle, I have 20% of my account free. So what I'm doing is using that 20% to make short-term hedges or insurance trades. So I'm placing a short-term bearish trade where I might make $1,000. Yeah, I won't fully offset what I'm losing on the 14, but I'm helping offset it. And if the market keeps going down, guess what? Next week, I will place another hedge or another insurance trade. If the market keeps going down and has a 1 to 2 month correction like it did in October to November 2018, what I would do is keep making money during the correction, and I would take me about 3 to 6 months to recoup my 14 grand. But I don't see that happening, but if it does, great. That's what I'm using my insurance for. I'm just trying to slowly recoup what I'm losing on my bullish trades or trades where I make money when the market goes up. But if I get, going back here to the chart, if we get another green daily and the market tells us the story that, hey, I'm ready to resume my upward trend, I stop their insurance trades. I get rid of them, and then 14 grand is free now to make money when the market goes up. So that's kind of the mental framework I'm using this year, the kind of approach I'm taking. So if you have it, maybe sometimes it's hard just looking at individual trades to understand what I'm doing, but that's the overall big picture of what I'm doing. And so my short-term bearish trade I placed on Friday is actually, it is losing money today because the market is up. Let's do the 9-month chart here. The market is up today, but if we pull up a 1-day chart, we can see the market went up, but this is a 1-day, 1-minute chart. Now you can see the market is pulling back. So it started up higher for the day, and now it's pulling back. So I'm not sure where it's going to end today, but I do know that I'm losing money on my short-term, my insurance. My insurance is not working the way it's supposed to. I'm actually losing money on my insurance. So what's going on in my head is like, yeah, I'm slightly annoyed, but this is the game I signed up for. I know that it's no guarantee that, it's going to work out. And again, I don't care if the market goes back up. I'll just take the little small loss, and I have the bulk of my account already in a position to make money when the market goes up. So I'm not worried about it. I'll take the small insurance loss and just leave my account open to profit as it keeps going higher. So I hope that made sense. Did that make slight sense, Peter?
Yeah. The only thing I was going to ask you is, so you have that number 14,000. That's 80% of your account?
It's a made up number. Yeah.
Okay.
I was just throwing numbers out, just showing people that if this was the case, it's different than this number. But yeah, if this was the case, I would have like 14 grand. That will represent about 80% of my account. And then what I'm doing is taking a small amount each week that we have that signal to do an assurance.
Okay.
So yeah, it's not the actual numbers. The Success Academy members can log in and see the actual numbers in my account. So hope that cleared that up.
Yeah, no, I just wanted to make sure that's kind of how I wanted to just make sure everyone understands that 14,000 was based on, that's 80% of an account size.
Yeah, some fictitious account. Yeah,
right.
Some fictitious account. Yep. All right, so that's it, everybody. I hope you found some value in this week's recap. Oh, we forgot our admin note. We're changing our recap days. We used to have these recaps on Friday and then release them like Monday or Tuesday. So now we moved our meeting days to Tuesday. So the release date will change depending on how quickly I can get these videos back. So the release date may be Friday. Anyway, it'll be a different release date moving forward because our meetings are now on Tuesdays. Generally, I can get all my edits back within 24 to 48 hours. So it'll be a little bit late from now on, but we'll stay consistent. So whatever day we release it, we will stay consistent. So with that, I think I'm looking at my notes. That's it. Peter, you have any final takeaways?
No, that is it. We will see you guys next week.
All right. You all take care. See you next week. Bye-bye.
Bye-bye.